Welcome to this presentation from the National Standards and Quality Committee. This webinar aims to inform all staff and partners on various projects that the National Standards and Quality Committee are negotiating and dealing with in an increasingly complex world of compliance and new legislation throughout 2018. The content for today's webinar, step by step, we'll first be looking at the BDO Quality and Risk Framework. We'll be looking at professional standards and new legislation that is being introduced throughout the year, specifically non-compliance with laws and regulations changes to the Code of Ethics, and new legislation being introduced for the Anti-Money Laundering and Countering of Financing of Terrorism Act. We will also be looking at monitoring, both from an internal inspection program perspective and from upcoming external inspections that are due to happen throughout 2018. We'll spend some time looking at specific scoping procedures, being a short change to client acceptance forms for all service lines, a quick introduction to the new global conflict of interest tool and checking procedures, and a reminder around the updates to engagement letters that have occurred during the year. And furthermore, will just be a brief reminder at the end around best practice guidance that is available and under development for BDO directorships, a due diligence package before any partners take on directorships in entities. So before we kick off the actual presentation, I just wanted to give a brief reminder of the people involved in the National Standards and Quality Committee. So Doug Haynes, Warren Johnson, Robin Turlesk, Tracy Rousel, Frank Burgess, Nolene Tane, and myself, Glenn Waterhouse. The objectives of the National Standards and Quality Committee, as determined in the Charter, are to promote efficiency, uniformity, and quality throughout the network, to ensure that there's a common understanding of BDO Global's risk framework, to minimise the risk of any negligent behaviour, fraudulent behaviour, or the performance of poor quality work, to maintain relations with NZICA or the Financial Markets Authority for the benefit of the network, to ensure that all service line directors have appropriate risk-based quality control review programs, quality control manuals, policies, procedures, checklists and day-to-day review processes, and to assure that the National Management Board around the degree of adoption of best practice and policies throughout the network. So the first topic that we'll move on to is the BDO Quality and Risk Framework, as that lays the foundations for all of our policies and procedures and work that we perform. And there's just a few manual updates to run through, but nothing too onerous in the 2017-18 years. So the purpose of the Risk Management Manual is to set out the basic principles of conduct and risk management that all of our BDO member firms should follow, not just in New Zealand, but around the globe. And the Risk Management Manual is important as the continued success of our network depends on our reputation as the provider, as David had mentioned in the webinar, in the video, of high quality professional services. Our reputation can only be maintained and enhanced if our member firms, partners, members of staff conduct themselves in accordance with the basic principles of our professional ethical standards in the provision of all of the professional services that we provide, as well as in the operation of the member firm levels. The Risk Management Manual contains policies and procedures which are available for all of our firms and for all service lines. This manual is one of the primary technical manuals as mentioned in the regulations of BDO International Limited. So where can you find it? We'll navigate now to SharePoint. So if we go to Sector and Service Lines, to the National Professional Standards Group page, to Quality and Risk, and to the Manuals button. You can see that there's a large PDF there with the BDO Risk Management Manual that will download when you select it. Okay, so for the updates in 2017, the risk management manual itself is split into two parts. Basically, part one is the basic BDO code of conduct. The fundamental principles of our conduct of the professional services are enshrined in the code of ethics that we have, and in PES1 for people forming assurance engagements. And these are all reflected basically word for word in the principles of part one of the BDO code of conduct. And it's important to remember that they apply for all services provided by member firms, no matter the nature of those services, nor the size and maturity of a member firm. So all of us, from a national level, we have policies and procedures that conform to these code of ethics, and that there's any additional requirements arising, that we are continually updating policies and procedures as we go. Part two of the BDO Risk Management Manual issues and sets out a risk management structure of our network and has some best guidance and best practice for an internal risk management structure within our member firms, as well as principles and procedures for the conduct of professional services across national boundaries and with respect to inter-firm relationships amongst our BDO network. In terms of changes for 2017, there's a new chapter that has been highlighted at the bottom there, Chapter 7, Digital Risk Management Manual. The objective of this is to provide a comprehensive overview of mandatory measures to improve information security throughout BDO Global. The BDO National IT team, as you've been aware, have been working on a series of projects to update and to ensure conformity with this digital risk manual. Auditors, as has been communicated already, but just a reminder, there is a new version of the audit manual that has been rolled out to all auditors. A summary of updates has been included also on the audit page. So if, again, we go to sectors, service lines, national professional standards, the audit and assurance button, tools and templates, audit manual. This page will summarise the version, the content, and there is an actual summary of changes PDF that people can click on to see what has been updated. The BDO audit manual has also been rolled out on all auditors' computers, available via the Start button and selecting through programs. On to the next topic of professional standards. Just a brief update on two of the biggest changes in a professional standard, being our Code of Ethics, and also the introduction of some new legislation that's coming out in October 2018. So you may have heard the term NOCLAR. NOCLAR is the widely used abbreviation for non-compliance with laws and regulations. Essentially what's happened is that additions have been made to our existing Code of Ethics in an attempt to clarify and redefine the accountant's role when any laws or regulations have been broken amongst a client. It is important to understand that the non-compliance with laws and regulations amendments are really looking at very serious and harmful non-compliance, and it gives us some guidance and guides our judgment for us in the direction of public interest. It also establishes a clear pathway, enabling us to disclose non-compliance with laws and regulations to a public authority, if again it is so serious and material and within the public interest that we would need to disclose it to a public authority. Important point is that this code applies to all accountants, and again, not just to auditors. A reminder that the very first paragraph of the Code of Ethics states that a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. Therefore, a member's responsibility is not exclusively to satisfy the needs of an individual client. Furthermore, we're all aware, as we get trained on it every year, that as members we shall comply with the following fundamental principles, being that of integrity, to be straightforward and honest in all professional and business relationships, objectivity, to not allow bias, conflict of interest, or undue influence of others to override professional or business judgments, professional competence and due care, to maintain professional knowledge and skill at the level that is required to ensure that a client receives competent professional services based on current developments in practice, legislation, and techniques, and to act diligently in accordance with the standards issued by NZECA, the XRB, the New Zealand Auditing and Assurance Standards Board, and New Zealand Accounting Standards Board. Also, confidentiality, to respect the confidentiality of information acquired as a result of professional and business relationships, and therefore not disclose any such information to third parties. And finally, professional behaviour, to comply with relevant laws and regulations to avoid any conduct that would discredit our profession. In terms of disclosure to an authority, it's quite important to mention up front, as we've just mentioned, the fundamental principles that we must abide with. If we end up disclosing a serious public interest non-compliance with a law and regulation after significant consultation, it would not be considered a breach of the duty of confidentiality. So that is why the amendments have taken place, is that in the past there may have been seen a possibility that accountants may hide behind that fundamental principle of keeping information confidential. As always, we're required to act in good faith, and we recommend that there's extreme caution when making any statements and assertions around a disclosure. That is why it will now become a mandatory consultation with the Professional Standards Group and also the heads of service lines, managing partners, if ever there is an actual non-compliance with laws and regulations that may require disclosure to a public authority. We only consider disclosing to an authority when non-compliance that has wider public interest implications that would potentially cause substantial harm to investors, creditors, employees, or the general public. Acts that cause substantial harm within the Act are defined as resulting in serious adverse consequences to any of these parties in financial or non-financial terms. Furthermore, there must be a direct or material impact on a client's financial statements, or be it fundamental to business operations or to be able to avoid material penalties. Some examples are provided within the Code of Ethics. Any non-compliance with the following laws and regulations are considered to be in scope. The type of serious nature that they're interested in. So anything that may have an impact on public health and safety, anything around tax and pension liabilities and payments, environmental protection, fraud, corruption, bribery, securities markets and trading, data protection, banking and other financial products and services, or when there's suspicion of money laundering, terrorist financing and proceeds of crime. So you can see there that these are extremely serious, wide public interest issues. The Code of Ethics changes basically means that we are still not required to be experts in the law, even though it may seem as though it is raising the bar significantly in terms of what we are required to have an understanding of. However, it is implicit that there is no expectation to have a level of understanding of laws and regulations beyond that which is required for the professional services for which the member firm or member was engaged. We'll briefly now turn to the framework that's included within the Code of Ethics of how we should be dealing with a suspected or actual non-compliance with a law and regulation when you encounter it as a client. The first part is to obtain an understanding of the matter. You must address the matter. You determine whether further action is required, make a decision, and then determine whether you need to report it to an authority or not. So it's a pretty simple 4-step process, which we'll run through in a bit more detail now. In obtaining an understanding of the matter, when we become aware of non-compliance, the key word here is consult. Obviously, we'd consult with others within the firm, and we can consult within the professional bodies. We can, if it was necessary, we may consult with legal counsel. But always, once we've performed that consultation, we would be applying knowledge, professional judgment, and expertise. A critical part of obtaining an understanding of the matter is clearly discussing that matter with an appropriate level of management or those charged with governance. So this is really just to clarify our understanding of the facts and circumstances related to the matter and its potential consequences. So clearly, because of the severity of the final results in terms of disclosure to a public authority, we need to be extremely careful that we have a full understanding of all facts and circumstances before making any judgment calls. The next step in terms of addressing the matter in the framework, we would advise management or those charged with governance, whichever level we're determined to be the most appropriate, to take appropriate and timely actions to 1. Rectify, remediate, or mitigate the consequences of any non-compliance. 2. We would aim to deter the commission of the non-compliance where it has not yet occurred. And 3. They should be disclosing the matter to an appropriate authority where required by law or regulation, or where considered necessary in the public interest. If there is a suspected non-compliance with laws and regulations, the client agrees when we have discussed the understanding of the matter and clarified, and they do perform one or three of these steps, then we would take a step back and consider whether we believe that is an appropriate response. And there would be no further requirement if we believe that the response is appropriate for us to disclose to the public. So some of those factors to consider in the appropriateness of the response of management or those charged with governance. Has the response been timely? Has the matter been adequately investigated? What were the actions to rectify and remediate? What were the actions to deter? And have they put in place actions to prevent reoccurrence? So have they considered changes to their internal control structure? Have they provided training to relevant staff that would be affected? Once we have assessed that appropriateness of the response, then we would determine if further public action disclosure is necessary. As we all know, having the framework is fine and working through this with the client is fine, but we need to be able to back it up with documentation to prove our thought process throughout. In relation to an identified or suspected act of non-compliance that falls within the scope of the Code of Ethics, we shall, so this is a shall mandatory requirement, we shall document the matter, the results of discussions with management, and where applicable, those charged with governance and other parties, how management and where applicable, those charged with governance have responded to the matter, the course of action the member in public practice considered, the judgments made and the decisions that were taken, and how the member in public practice is satisfied that the member has fulfilled our responsibilities per the Code of Ethics. If you have any questions on NOCLAR, again, if there is any suspected non-compliance with laws and regulations, your first port of call would always be to discuss with an engagement partner, and then we recommend that you would discuss with the professional standards group, and considering all the facts and circumstances at that point would make the next decision. So the next topic or new piece of legislation is on the anti-money laundering, countering financing of terrorism. AML CFT is the short and abbreviated version for the Act. So what is it? AML CFT, as I said, stands for Anti-Money Laundering and Countering Financing of Terrorism, which is a bit of a mouthful. But the purpose of money laundering itself is quite simple. It's to disguise profits of crime as bona fide earnings so they can be spent with impunity. So it sounds like a very interesting act, but why should you care about it in the practice? Well, the AML-CFT legislation, which has been in process for a number of financial institutions for some time now, and I'm sure you would have experienced increased identification procedures even in your own bank. The legislation is due to come into force for accountants, phase 2, on the 1st of October 2018. So what services are actually going to be involved here? So there are things called captured activities. So below, on the screen here we have trust and company service provider functions as the first part. If we are acting as a formation agent of legal persons or legal arrangements, if we are acting or arranging for a person to act as a nominee director or nominee shareholder or trustee in relation to legal persons or legal arrangements, if we are providing a registered office or a business address, a correspondence address or an administrative address for a company or a partnership or for any other legal person or an arrangement, unless it is solely for a service which is not in scope, then those three will be considered as captured activities under the AML-CFT legislation. And we'll go on quickly to give a brief overview of what that might mean. There's also specific captured activities around gatekeeper functions. So where we are managing client funds, such as in trust accounts, securities or other assets, other than sums that are paid as fees for our professional services. Where, if at all, we are engaged in giving any instructions on behalf of a customer to another person for any conveyancing or the transfer of a beneficial interest in land or other property, or a transaction on behalf of any person in relation to the buying, transferring or selling of a business or legal person in any other legal arrangement, or a transaction on behalf of a customer in relation to creating, operating and managing a legal person in any other legal arrangement. Important to point out that in this instance, auditing and other assurance activities are not captured by the AML-CFT Act. So if we are performing a captured activity, how is it going to impact us directly, or you and your customer directly? So for captured activities, you will be required to conduct customer due diligence, abbreviated to CDD, and you must conduct CDD on your customer, any beneficial owner of a customer, or any person acting on behalf of a customer. Dependent on the captured activity, which we won't go into here, there are differing levels of customer due diligence stepped up based on the activity that's performed. These will be discussed and talked about in later presentations to all staff and partners as the Anti-Money Laundering Act CFT is due to come into fruition in October. Customer due diligence must be conducted when the reporting entity establishes a business relationship with a new customer. You may not have to conduct CDD on every new customer. Again, it's only when they conduct an activity captured by the AML-CFT Act. So it isn't, again, a reminder, it's not going to be on every single new customer that we bring into BDO, but it will be on ones that have a captured and performing a captured activity. Again, you're going to need to conduct the CDD in line with the level of risk that you anticipate in accordance with the requirements of the Act. If in your initial dealings your customer does not require you to conduct a captured activity, but over time you will be instructed to carry out captured activities, you must ensure that you have completed the necessary CDD before you carry out any captured activities. So for existing customers, the term existing customer is defined as a person who is in business relationship with us immediately before the Act beginning. It's pretty straightforward. But you must conduct CDD on existing customers if there has been a material change in the nature or purpose of the business relationship with that customer, and or you have insufficient information about that customer. So there's going to be a process when you've got to consider what information you have and whether that information will be sufficient. And you're going to need to do an assessment as to the level of risk involved and whether you hold the necessary identity information. You should not conduct any captured activity until any of these requirements are met again. We are also going to be required to submit a suspicious activity report to the Financial Intelligence Unit through a Go AML online portal if there's any reasonable grounds to suspect that an activity may be relevant to an investigation or prosecution of an offence. We'll be required to submit a prescribed transaction report to the Financial Intelligence Unit through the portal when a customer conducts a domestic physical cash transaction of $10,000 or more, or an international wire transfer of $1,000 or more. This is again when they are conducting it under one of the captured activities. We're going to be required to keep records generally for at least 5 years. So at this stage, this presentation is just meant to be a heads up around AML CFT, but it's important for everyone to know that we are on top of the legislation. And it's important to know what else we are doing about it. So at BDO New Zealand, as a reporting entity, we'll need to undertake the following key activities. Our first step is to appoint a risk compliance officer who will oversee the entire program. And then we will need to perform an AML CFT risk assessment, which will step back and look at the size and complexity of our business, the nature of our services provided and directly matching to the captured activities required under the AML CFT Act, the ways that our services are delivered, the types of customers we have, countries we deal with, and institutions that we deal with. We'll also be required at the national level, there will be some liaison with the Department of Internal Affairs, whether we will have a national level program that can capture all firms or whether we'll need to filter out a program for every office, but we will need to establish an overall AML CFT program, and this will include the program governance around a risk officer. It will be based on a risk-based approach. There'll be appropriate vetting for any required staff at a local office level performing AML CFT procedures and required training. We will introduce a customer due diligence program. And we will set up frameworks around suspicious transaction reporting, record keeping, and there is an audit and reporting requirement that we will monitor and perform from a national perspective. Again, the Department of Internal Affairs has only just released guidance and guidelines once the Act came out late last year, has only just released this year some guidance and best practice for accountants. We at a national level are currently working through that guidance. And again, we'll stand by for the compliance officer to be appointed shortly. Further training, as I said, will come out for all staff, more detailed training in the coming months. So moving on to monitoring. The monitoring for this section captures both our internal inspection program and a look at the very busy schedule for 2018 in terms of both internal and external monitoring from regulators. A brief wrap up on some common quality control review findings from two divisions. Firstly, from the advisory division. So there's 10 common findings on this page. For the reporting basis, mostly were performed under the tax administration financial order. A reminder that special purpose financial reporting requires 100% compliance with the SPFR framework. Financial reporting and disclosure checklists were not always completed. Evidence of partner review is not always clear. Engagement letters, some are out of date, don't exist, on the wrong reporting basis. Internal QCRs, quality control reviews, not as prevalent throughout the network, however they're always encouraged as best practice. In terms of training, it was noticeable when we were reviewing CPD records that partner attendance at training needs to increase. Consultation, the use of file notes, peer review disclaimers and the control file form needs to be better adopted. There's poor admin around the use of corporate trustee guidance. For certificates of public practice, some associates may be seen as offering services to the public, so there's a wider conversation that's happening around CPP at the moment. And for corporate finance work, a reminder, if not a corporate finance partner, if you're an advisor, BAS partner, then it must be peer reviewed by a corporate finance partner specifically. For audit and assurance, again, there's a lack of demonstration of professional scepticism, particularly when dealing with representations from management or evidence provided for them. There's still a tendency to place a lot of reliance on representations or certain evidence without going deeper and further into the source or to challenging assumptions that have been provided. The same for the use of experts, determining whether we have sufficient and appropriate audit evidence, determining how we are able to review and how we have the expertise to review the expert's report is not always well captured and documented on file. There is inadequate testing throughout files of specific revenue recognition policies. There's a lack of time on the file by both engagement partners and engagement quality control reviewers. And there's a continued incorrect application of substantive analytical procedures methodology, although noting it had improved from the previous year. An overall summary, detailed findings report of the 2017 Audit Quality Assurance Review will be available shortly on the Audit Insight page. Last year was the first year that we came up with a staff opinion survey that was sent out to all firms that we reviewed or visited during the year. And overall, the summary of the year-to-date results, we have to say, was really pleasing. So there was really positive, strongly agree communications around leadership communications, tone at the top, demonstrating a commitment to high quality work. So that was really pleasing. The work-ons on this screen simply around client acceptance procedures to be completed prior to the commencement of any work, and also re-acceptance procedures to be completed prior to the commencement of any current year's work. So client acceptance and specifically re-acceptance. Re-acceptance is not just the domain of the auditor again. Every service line is required to perform some re-acceptance procedure just to consider whether there's been any material changes in the governance or the integrity, or is the work that the client is now performing outside of our level of knowledge or scope or skills. But at the moment there's very little of that work aside from on audit files being documented. Again, really pleasing results around the leaders of the firm requiring adherence to ethical standards. And there was certainly a belief that leaders of the firm would resolve a breach of ethical standards, which is a wonderful result and credit to the partnership group. Work on certainly for the partnership group, however, around the providing of timely and regular feedback on the quality of work and leadership participating actively in the planning of engagement and of the timely review and sign-off of people's work. The staff opinion survey will be conducted again in 2018. By the end of 2018, we would have performed for all firms. So looking ahead for who has got a visit planned, it's quite busy. Auckland has the full realm, so audit, advisory, business recovery, corporate finance, information systems, risk advisory and tax. Central is planned for an audit visit, Christchurch, Bree and tax, Invercargill audit and Bree, Northland audit, Rotorua audit, Tauranga audit, Bree and Wellington audit. These are all planned on the caveat that the next slide doesn't interrupt. So we are very fortunate, depending on how you look at it, to have the two reviews scheduled, one from Cairns or NZECA, and one from the Financial Markets Authority. So the Cairns review is an all-practice, all-service line review. They are planning to visit us in the late June, July period. And as I said, it will capture all service lines. The program, however, is that they will review our quality control policies, national policies and procedures in Auckland, and our compliance with PS1 and PES3. Then they have selected 4 officers to perform a 4-hour visit of to ensure compliance with those national policies and procedures, which will be around CPD requirements, independence, conflicts of interest, etc. So they will be visiting Auckland, Palmerston North, Napier and Gisborne to review those compliance with policies. Then they will base themselves in Wellington and they'll be performing file reviews and file selections from all service lines from around the country, but they'll be based in Wellington to perform that review in late July. Then we have the FMA review planned for September. This will be for all licensed audit partners. However, they might not select all licensed audit partners to review this time, which is a pleasing result. They will also perform a review of our quality control system, national policies and procedures. So we're getting a thorough frisk of it this year from both regulators, if you like. But in relation to this previous slide, if you are subject to a specific file review from one of these entities, be it CANS or the FMA, you will be exempt from having an internal inspection review performed in the current year. Otherwise, it would just be over-egging the review process. So back to this slide here. This is a fluid slide, and we will update once we know actual file selections from CANS and the FMA. Moving briefly now to scoping procedures, a reminder on conflict of interest checks, client acceptance forms, and engagement letters. So BDO Global have developed a new global conflict of interest tool, or COI for short. If you want to perform a global conflict of interest check, a reminder of some of the procedures around that. If you are proposing for any engagement that has any related entities overseas, we need to ensure that the entity is not a restricted entity that is listed on BDO Member Firm Squared COI tool. You can see on the screenshot here, there is some, at the date that I took this snippet, 6,386 restricted entities. We are not allowed to perform any services on these. There are increasingly strict independence rules from the European Union and from America around what we can and can't perform. So again, a reminder, before you perform any services on a new client, you must ensure that there are no overseas operations where we might need to check that it's a restricted entity or perform a global conflict of interest check. If you do discover that there is an overseas parent, you do need to complete a global conflict of interest check form, which is available on, again, on our Insight page. So if you go to Shared Services, Conflict of Interest, and scroll down to the bottom of this page, there is a Word document that you must complete in its entirety. All of these details are required to be completed, and then you must send that back to Vicky Fairchild, who is now the Deputy Independence Champion for BDO New Zealand, who is recently employed with the BDO National Office. Vicky will then perform a search of the Global Restricted Entities database to tell you whether the client is restricted or not. Vicky can then request a corporate tree, which will provide you with a list of all related entities for that company, and then perform and process a global conflict of interest check and report back to you with any responses that have been identified from other BDO Global member firms. If you have any questions on this process at all, please contact Vicky Fairchild at that address on your screen or myself. Vicky is working on updating the conflict of interest check Insight page at this point in time with further instructions. Client acceptance forms. All client acceptance checklists have now been updated and are on Insight on the same page under client acceptance forms to ensure that we are not performing any engagements in UN sanctioned countries. So essentially, sanctions are a common measure that are handed out by the United Nations Security Council to enforce any decisions that they make. They apply pressure to countries that are threatening peace have harmful policies or are not complying or cooperating with any international law. And they can also apply to individual people. As a United Nations member, New Zealand is bound to follow the Security Council's decisions. So BDO New Zealand must fully comply with regulations that implement Security Council sanctions. Given the wide scope of the regulations and possible penalties for any non-compliance, BDO New Zealand local member firms must not perform work for companies that have operations in or deal with businesses in overseas locations that is sanctioned by the Security Council. On the client acceptance form itself, you will see a hyperlinked screen to the countries that are currently under sanction. The start of 2018, both letters for advisory and audit have been substantially updated, and all letters have had the terms and conditions updated as well. The main results was a significant reduction in size, both of the body of advisory and audit letters, but overall the terms and conditions for all engagement letters have reduced significantly. And this was basically achieved by removing paragraphs that were included that were in fact terms and conditions that we had already, or we were removing superfluous paragraphs that are not expressly required by an existing professional standard, be it SES 2 or ISA 210. So some of the main changes from the last version, and just a reminder that this is in relation to currently the advisory engagement letter. There was a general review that was performed in conjunction with Minter Ellison, ensuring that we were compliant with new cyber, privacy, health and safety provisions. It also provided coverage for when we use external contractors and outsource, and again condensing the terms and conditions as much as possible. In terms of the presentation, the new engagement letter for advisory still retains the same feel, but changed to be more user-friendly. The main body of the letter has been deliberately set to be more friendly tone before the terms and conditions are laid out in legalese. Over time, the main body of that engagement letter had become quite cluttered with all sorts of additional information that maybe we had cherry-picked from other engagement letters we had seen, and so the review of SES2 was done directly to see what was required and what wasn't. So these letters have all been reviewed and signed off by both the National Standards and Quality Committee and the National Audit Committee. Policies and procedures. I'd like to introduce a new consultation policy and a reminder on directors' due diligence best practice. Professional Standard 1, quality control from all service lines and member firms, explains that consultation uses appropriate research resources as well as the collective experience and technical expertise of a firm. And this helps to promote quality and improves the application of our professional judgment. As we know, consultation is strongly encouraged within BDO, and it includes discussions at the appropriate professional level with individuals who have specialist expertise to resolve a difficult or contentious matter. So it also helps to promote quality, improves the application of our professional judgment, and really helps to promote a culture where consultation is recognised as a strength. And whenever we have a difficult or contentious matter, we know that there's some help and advice not too far away. BDO, sorry, skip one screen too far. We have two mandatory consultation groups. One is for a financial statement disclosure review, and one is where there are specific issues that require consultation. So we'll look at these two things briefly now. A reminder that this is for a new advisory consultation policy. An audit consultation policy has been in existence for some time, but mirrors this advisory policy. So for mandatory financial disclosure reviews, so this is where you are preparing a set of financial statements, or you're auditing a set of financial statements. When do you need to send it to the professional standards group, which is the new name for the technical standards group, for a review? So tier 1, whenever you are dealing with a public interest entity, All Tier 1 entities, both for-profit and public benefit entities, must be sent on an annual basis for review with the Professional Standards Group. For a Tier 2 engagement, it must be reviewed once every 3 years. However, there are certain trigger points that happen that could mean that you are required to have an annual review or based on a trigger event occurring. It's required to be for Tier 2 reviewed annually when financial statements that you have compiled or prepared are audited by another audit firm. Also, where Tier 2 entities whose financial statements are widely released. A trigger event for Tier 2 reviews is when the Tier 2 entity is in their first year as a client with the firm, or when it is transitioning to a Tier 2 accounting framework, or if the Tier 2 entity is applying a significant new accounting standard for the very first time. The Professional Standards Group have collated client listings from your local member firms of all Tier 1 and Tier 2 clients prior to our upcoming busy season. So we've got a really good understanding and idea of when things are likely to come into us. However, for this year, we are really trying to encourage, we just don't want to be sent a set of financial statements in the last week before sign-off. We really want to get on board and consult with you and engage early, and to be brought into team planning discussions, if it's an audit, into engagement team discussions, to just give us some context around what your client does rather than just reviewing the financial statements themselves. Give us an understanding of what's happened during the year, and we may be able to help guide around specific new accounting treatments that may need to occur, some improvements and disclosures that you might want to discuss with the client early rather than at the very end of an engagement. Again, we only have some idea of when accounts are due to come in, but we're going to send out an email shortly to all managers and partners asking us to let us know when they expect certain financial statements for Tier 1s and Tier 2s to come in. The next thing that I want to show you is around the work log. We get a significant amount of requests via email, via instant messenger, via phone calls, but to help us manage our workflow better in the 600 or so queries and consultations that we get per year, we're requesting that teams log requests, be it consultations or financial statement reviews, through the Professional Standards Group work log. So the work log is available if we go to the National Standards Professional Group page again, Query Submissions button, and you click on Create Technical Query. Where it brings up this technical query form where you would type in a title, you would select the query type, technical consultation, then your financial statement review, client acceptance, continuance, independence and ethics, assurance, or help, please call me. So we'd put in technical consultation, you'd put in the name of the requester, the client code, the deadline, please noting that we have a 5-day turnaround per 5 working day turnaround per the consultation policies. And when you put in 5 days here, it won't exclude the weekend, so please be mindful of that when you are setting a deadline. The status that it is new, and any further comments and explanation that you may wish to include. So please a reminder that if you have any consultation that you log through that work log. For the remaining Tier 3 and Tier 4 special purpose, we're only recommending a review only in situations where the engagement team has identified a need. So we've run through the work log. So that was financial statement reviews. Where you have specialised situations where consultation is required are in the following scenarios. Any accounting matter that the engagement partner considers to be difficult or contentious. Again, this is in line with promoting a culture of consultation. Where the client may be applying any controversial accounting policies or the interpretation of accounting standards, where alternative treatments could have a material impact. When the client has used the true and fair override, which is in extremely rare circumstances. Any instance where an engagement partner has received communications from a regulator or a third party seeking an explanation on financial statements or any related disclosures made. Any instance where the NOCLAR provisions that we discussed previously around the Code of Ethics may result in a disclosure to a relevant authority. So those are required specific consultations outside of financial statement reviews. Of course, there could be a number of reasons that you would want to call or log a query for. A best practice guidance is being drafted for when a partner has been asked or is applying to be a director of a company. The guidance for this is broken into three main objectives, three categories around the appointment, around the ongoing review and maintenance, and retirement. So in the appointment, there is preliminary information that is required and the procedures to be completed, which include client acceptance, scoping, and completion of appropriate engagement letters. The ongoing and the retirement guide are currently under review and development, but we expect that these will be out within the coming months. Just like to remind everybody that although it's not mandatory, it is highly recommended that if a BDO partner is going to, that they undertake the Institute of Directors Company Directors course. As part of this course, you will receive the Pillars of Governance Best Practice, which is a valuable reference tool. Again, any accepted positions must be captured by local member firms, and they must also be reported on the conflict of interest register, on the conflicts of interest page that we had seen previously. Conflicts of interest, independence, and prohibited securities register here in Excel. There is a list of directorships and statutory supervisor roles that are being performed that must be continually updated. Okay, so that concludes this presentation from the National Standards and Quality Committee. As you can see, there is a significant amount of work and project work that is ongoing. The compliance world is only increasing, not decreasing. Of course, if you have any questions, please feel free to contact any of the National Standards and Quality Committee members, and we'll try and assist you as soon as we can. Thank you very much for your time.